I'm a 20-year-old day trader who's in college and works full time, and here's how I made $80 day trading the S&P this morning. First step is before the market even opens, we got to figure out our bias. Now I use a top-down analysis to figure out this bias, so let me walk you through that. So we start off on the daily time frame. This is going to be the S&P. We see that the previous day candle took out its previous high and then closed way above, and it's trading towards this daily high as well. So this is going to be our main target for today. The next step is to scale down to the 1 hour chart to look at the trend. So we can see that we've been trading higher, but recently we've gotten into a little bit of consolidation here. Staying on the 1 hour time frame, now we mark out all the highs and all the lows within the market. Now that we have all our highs and lows marked out, now we can go into looking at the session highs and lows. Now that we're on the 15-minute chart, we mark out our sessions down here. So we got 8 p.m., midnight, 2 a.m., 5 a.m. Within each session, we mark out the highs and the lows coming out of each session, and we label them here. As you can tell, the Asia low and the London high have already been traded through, so we can take these off of our chart just to clear it up. Now that all that's marked out, we're back on the 1 hour chart, and I just like to mark out the high and the low of this 8 a.m. candle. I put the highs and low in white just so that way they stick out, and I use these for 1 hour power of 3. From here, now we start to form the ideal move. So we see that these lows are stacked here, so this might be a likely target, and these highs up here are stacked as well. So we got two targets, both sides of price, so now we just wait until the market opens and see what it gives us. Now, right at market open, we're watching on the 5-minute chart, and we see price came up to this high and then started trading lower. Now this is where my ideal move really starts to form. If you look, we have this high where we have smooth level of a bunch of highs right here. So there's a lot of liquidity above this level. Now that we have our target set at this level and this high time frame level, we're waiting for the sell side sweep for us to start looking for entries. During the 950 1010 macro, we see a sweep of sell side liquidity. This is exactly what we want to see. So now we're waiting for a move to the upside. We immediately get that move, so now we're waiting for a 5-minute retracement past the equilibrium. We did end up trading higher, but eventually we did get this retracement below the equilibrium level, which is this purple line. After we get this retracement into the discount range, we scale down to the 1-minute chart to see if 1-minute structure has broken to the downside. Now obviously we do have a pretty large break here, so it's safe to say that we have done that. Now that we've hit all of the steps of our entry, now we're just waiting for a 1-minute break of structure to the upside. That could come in the form of an inverse fair value gap, a classic break of structure, a 1-minute SMT, or a 79% closure. At 10:34, we get this 1-minute break of structure, and we enter long on S&P for 2 contracts.